Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 14th of March 2022. We hope you all had a very enjoyable weekend. Today we're reporting that gold and silver physical demand so far this year is skyrocketing. And we'll have a look at an article and a few dealers' websites to see what impact that is having. So let's take a look. Bloomberg article dated 13th of March. Gold dealers swamped by demand as war creates inflation scare. This is quite an interesting article here, and perhaps not a surprising one. Gold is playing its age-old role as a safe haven in times of war and crises, and people all over the world are piling in. Russia's invasion of Ukraine has sent the price of everything from oil and gas to wheat and metals skyrocketing, sparking inflation fears and threatening global growth. That's driving retail investors everywhere from Vienna and Singapore to New York to the safety of gold, which spiked to $2,070.44 an ounce, close to the record reached during the pandemic. The almost 10% surge in bullion prices since the start of the year is turning into a boon for bullion dealers, like Rudolf Brenner, founder of Filoro Edelmetall GmbH, whose shops in German-speaking Europe now have long lines of buyers, a trend that's likely to continue with the conflict showing no signs of abating. When the crisis in Ukraine started, we saw massive orders, said Brenner, whose sales are triple their normal level. People are buying everything. Similar stories are emerging from gold dealerships around the world. At Empire Gold Buyers in New York, Chief Executive Officer Gene Furman said 30% of his customers trading luxury items like watches and jewelry want bullion instead of cash. Gregor Gregerson, founder of Silver Bullion Pte Limited in Singapore, saw gold and silver sales rise 235% in the first week following Russia's invasion, and demand has only intensified since. Investors are thinking along the lines of a worst-case scenario with the war in Ukraine and are finding it prudent to buy physical safe haven assets in a safe jurisdiction like Singapore, Gregerson said. The soaring demand comes after an already strong year for physical metal buying, particularly in Western nations. Demand for bars and coins hit 1,124 tons in 2021, according to the World Gold Council, the highest in almost a decade. That helped support prices at a time when institutional investors weren't dipping in as much, and that's noteworthy. Current clamour for physical gold is causing already high premiums on retail investors' favourite versions of the metal to extend gains, a sign of their scarcity. To get their hands on a 1-ounce bar, buyers may need to cough up as much as $100 over the spot price. Premiums are up about 25% at physical bullion brokerage Goldcore and are expected to rise further, according to his Chief Executive Officer Stephen Flood. In his view, the main driver is concern about the financial sanctions on Russia, which have politicized and weaponized the payment system. It's the ultimate backup plan to have the metal within reach, Flood said. Everyone and their mum is looking at precious metals now. But it's not a one-way street. Many are bringing their bars, coins and jewellery back to the dealers to cash in on prices that haven't been this high since the summer of 2020. Back then, there was a spike in activity as lockdowns eased and people flocked to gold stores to trade in the haven. Still, there are more gold buyers than sellers now, according to Ash Kundra, who runs J. Blundell and Sons in London's historic Hatton Garden Jewellery Quarter. He attributes it to the far more fearful environment among retail investors. I'm buying about 60% of what I was in 2020, he said. Now I'm selling more. End of this article. We'll comment further. Now we have to admit that here in the UK, there is a mixed bag in terms of gold availability. For example, if we look at Bullion by Post, one of the larger bullion dealers here, at the top of the page we can see high demand. Due to current high demand, we aim to dispatch orders within 1 to 4 working days. They're not saying they don't have any gold, but they are saying that they are rushed off their feet in providing it. Then we look at another quite large bullion dealer, and interestingly, they say, our website is currently undergoing maintenance. Please check back soon. But then two others. We have one called Chards, very well established, well-known dealer, and they actually have a range of gold coins available. We've telephoned them this morning and they confirm that their website is up to date and what they show as available in stock actually is in stock. And in fairness, there's a reasonable amount that people can buy. And further, there's another one called bullionhouse.co.uk, and they are basically in a similar situation. So at the moment, we would not say there is a shortage, but we would say that demand is rising. And so let's just take a quick look now. It's what time? 9:43 in the morning here in the UK. Let's see what's happened to gold prices today. And we can see that in pound terms, gold is actually down £20. In US dollar terms, it's down 25, just over $25 at $1,900, basically $63. And in euros, gold is down today 31 euros at 17.90. I know you're asking me, what about silver? How is that faring? Well, I'll do it in reverse order now. In euros, silver's down 0.50 euros. That's half a euro. In pounds, silver today is down 34 pence, which is roughly a third of a pound. And in US dollar terms, we can see that silver is down 41 cents at $25.47. Now, you may be wondering why the fall. Well, it has been announced on Bloomberg this morning. A round of talks, US-China officials to meet, and there was a headline, European gas slumps as Russia, Ukraine to hold further talks. Whether they'll come of anything, we don't know. But what did strike us as interesting is the fact that equities overnight in Asia Pacific, mixed bag, some up 0.5%, but the Hang Seng down almost 5%. But in Europe, Middle East and Africa, but essentially the UK and Europe, we can see equity markets are actually up between 0.25% and 2.39%. We said in our weekly update that we published on Saturday, and we've put a link below, that we're going to expect some volatility this week. As potentially good news comes out, we're going to see gold and silver prices potentially fall. If that good news is then dashed, or there's perhaps more horrific incidents in the Ukraine, then we will see them rise. We're going to have some oscillation. And then, of course, on Wednesday, as already mentioned in our update, we have the all-important FOMC meeting and a determination on interest rates. And those of us in the UK will have a similar meeting with the Bank of England's Monetary Policy Committee on Thursday. And we suspect they too will be raising rates, because the Monetary Policy Committee, I don't think, is meeting in April. And therefore, their next meeting will be in May. So my bet, even though I'm not a betting man, my bet is that rates will go up on Thursday for us as well. Thank you so much for listening. Please give us a thumbs up, subscribe, and we'll cover what happens with the FOMC. And we'll publish that on Thursday, because we want to really go through the entire press conference on Wednesday, and we'll produce our thoughts on that on Thursday. And if you're looking to purchase gold and silver, the physical at least, just watch out for those premiums. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.